Hey, welcome back to Everything Money. As always, I'm here, Seth, your calm, soothing radio voice to bring Paul back down to earth when he's crazy. Paul's here and Mo's here. We're talking about Verizon.
We just spent 18 minutes discussing what we're going to say about Verizon.
We're doing our due diligence, Paul.
No, we're not doing our due diligence. That's the point of this channel. We just go on the numbers and keep going.
We're talking about Verizon. Paul, you're AT&T, right?
No, I'm Verizon.
Oh, I don't know anything about this.
I'm on my dad's cell phone plan still.
Isn't that cute?
Yeah.
Too cheap to pay your own?
There's a guy on the internet who says I just have money because of my daddy. Well, my daddy still pays my cell phone bill. So what's up, losers?
My dad still pays mine too.
I just got a jetpack. I just got a jetpack the other day for mobile travel.
Go on.
Just put it on my dad's account. It's good.
Verizon is an incredible cell phone company. Their fortune rank is 20. They got 130,000 employees. We're going to look at the 8 pillars. If you know nothing about Verizon, you've hit the right channel because we're going to use our 8-pillar analysis, look at the fundamentals behind this company. What is the stock price and why is it at this price? Is it overvalued, undervalued? Should we be buying or avoiding? I'm looking at the chart now behind Paul.
Seth, look at this chart.
Go on.
What's the date right here?
2000.
What's the stock price right here?
$67.
Roughly.
Uh-oh. Boom, boom, boom.
20 years later.
Uh-oh.
Another example, guys. If I had told you, if this was our only history, and I'd said to you guys, this stock is not going to go anywhere for 20 years, you'd have told me I was stupid. You're going to say, oh my God, Paul, you don't understand stocks. It's not about value investing. You're an idiot. You're a moron.
Yes.
There you go. Now let's look at something else. Last year, in the last 4 quarters, they did $132 billion in revenue. In that year, they did $61 billion.
Revenue doubled, stock
Revenue
goes down.
over doubled, the stock still has not rebounded. If I told you back in 2000, right here, if I'd said to you, Paul, like every other hype investor in the world, if I'd said to you guys, the revenue is going to double over the next 20 years, where would you have guessed revenue to go? You'd be like, well, of course it's going to go up. The stock's going to go up if revenue is going up doubling.
Uh-oh.
You know why, guys? Fundamentals matter. Fundamentals matter over long periods of time. Over this period of time, it doesn't. Over this period of time, it really does. That's all that matters here, guys.
Wow.
So when I hear that, I laugh and I giggle and I go, oh, you idiots.
Today's
Not
July.
you guys, because you guys are watching us.
Today is July 27th. Paul, let's get into the nuts and bolts of Verizon. What is the market cap for this company?
I prefer to look at the bolts and nuts. $231 billion, 11.5 PE, 15% profit margin. So 2 check marks to start us off right.
Pretty good.
Now, here's something interesting, Seth.
Go ahead.
They pay a 4.5% dividend at $10.4 billion. I think there's some free cash flow issues at this company in the last year because it's showing the last 12 months at negative $21 billion in free cash flow. I don't know why that is. We'll check it out later. But pretty average return on assets and return on invested capital, so I'm not too excited about that. But 2 check marks to start.
Yeah, there is some chaos when we get down to free cash flow, which is pillar number 7. But for pillar number 3, we're at revenue growth over the past 5 years. I'm sure it's good.
123 to 133. It's a check mark, but remember, this is a huge company. I mean, who here doesn't have a cell phone? I mean, literally, as Mo said beforehand, what's your growth coming from? Taking from other competitors and kids?
That has to be it.
I mean, everybody has cell phones. Like, our parents have cell phones, right?
Is this the commercials I'm seeing where they'll give you a new phone if you switch over? Is Verizon this company doing this?
I don't know. I don't have cable.
Wackadoos. Keep going, Paul.
Because my dad won't pay for my cable, so therefore
That's right.
I won't do it.
Yep. Profit growth is pillar number 4.
16 to 20. Check mark there.
Okay. How about
shares outstanding?
Are they buying or selling?
They're actually selling a little bit. 4.08 to 4.14. So very slight, but they are increasing their shares. It doesn't worry me at all, but that's not a big jump. So this software, Seth, why don't you explain it to people?
Yeah, so if you're interested in looking at these numbers, you've never had access to them before, we offer a very cheap alternative to some of the other competitors out there. Inexpensive. In that you can have this software by joining our Patreon. In the near future, you can join at everythingmoney.com. But for the moment, join our Patreon. You get access to this. You can have it within the hour. And you can have access to our 8 pillars, the cash flow, all the balance sheets, the 10Ks, our stock analyzer tool, amongst a myriad of other tools that is cracking the internet, Paul.
And we even have
software. Go ahead.
A mobile app. So guys, this used to be $8. It's going to $49. Nothing changes. If you lock in at $25, that is your price. It gives you all of these things. And guys, the reason we made the software was everybody kept asking me, where do you get your software from? So we finally just made our own software. $25 a month, 80 cents a day versus $235, but you get all of this. This is a no-brainer. Don't be lazy. Don't be dumb. If you take your investing seriously, this is the way to go.
Absolutely, Paul.
So back to our good friend Verizon.
Pillar number 6 is current assets over current liabilities, Paul.
36 billion versus 40. That's a negative. That's an X. Now, free cash flow. What the heck happened here?
Now, this is what I was talking about. What is the story with free cash?
Man. So, guys, they paid a $10 billion dividend. The previous year, they made $17.5 billion in free cash flow, so they could support it. But they spent $64 billion in capital expenditures. Now, here's the good news, guys. You know what I like seeing here? The loss of free cash flow was not from cash from operations. Because remember, free cash flow is cash from operations less your capital expenditures. It was, according to this, from a jump in capital expenditures. So they're reinvesting back in themselves.
You like this?
Yes, because look at this. Now, granted, I like it from the 500-foot view. Now, I don't know what they actually spent it on. It could have been stupid things, but look at their operating cash flow. 15.6, 29.6, 34.7, 37.5, 42.6. Growing cash from operations. This is what I like seeing.
Can they pay a dividend, Paul?
They can pay their dividend as long as they get back to the previous year's free cash flow. As long as they can get there, they can pay their dividend.
This isn't a small dividend, Paul. 4.5%, $10.4 billion.
It's a big dividend.
They need to do some work here.
It is a big dividend. Now, I would go, if I were you, go look at their history of paying dividends. Have they ever decreased it? Have they consistently increased it? This could just be this big capital expenditures. Go look into what they spend it on. Go read their 10K, see what they spend it on. And guess what? If you want the 10K, here's what you do. You go right down here to our main page, annual reports. It pops it up, and you hit 10K, boop, and there's your 10K. Start reading. So, from a cash flow perspective, I think this is a little skewed, but the average of the last 5 years is 4.4, where we added this line here, which is not in any other financial statements, times 20 is $87.4 billion.
Current market cap is 230, Paul.
230. Now, remember, they also had a big negative year here. And they had some bad years here. So I still think it's probably 50. I don't believe going off these numbers. So for all the people out there who say, oh, Paul's too anal, he goes, no, I look at the last 5 years, and there are 3 fluke years in the last 5 years. So some would sit there and say, are they flukes then? That's why you have to go over long periods of time on this company. Go back 5, 6, 7, 8 years, because even if you go back to the previous 5 years, 15, 12, 20, 7, 18.3. So go understand the financials of this company. What are they doing? What was the $64 billion in capital expenditures? I don't think it's as expensive as people maybe that it looks from a free cash flow perspective, but you still need to understand what their plan is for the future on their cash flow and on their earnings and on that dividend. Because if you're relying on a 4.5% dividend, all of a sudden you lose it, what's going to happen?
The dividend investors will be upset, Paul.
Yes.
Mo, are people trading this stock over there in the bid and ask nation?
Again, this is another one where you look back to January, February, and you just see it's just consolidating just in this range, and it's kind of range bound. So I think right now it's below all of its major moving averages. Let me check. Yes, it is. So it's creeping up and trying to break through the 25-day moving average. It's not working very well. And you can see that the volume is just kind of declining on the stock. So this is going to need something to push it forward, some kind of news, maybe earnings, and earnings already happened, so that's not going to happen. But
what about a crazy tweet by the CEO talking about some nonsense? Would that help the company?
I think that's T-Mobile.
Okay, keep going.
You know,
what happened to T-Mobile?
Oh, you know the T-Mobile CEO?
No.
He's tweeting, and he's the Elon Musk of the cell phone
It can
world.
really help your stock price.
But what did he tweet about?
Oh, just go and read his Twitter. You don't know what he tweets about. He just tweets all kinds of
really just random stuff.
Oh yeah, he's great. He's really great.
You should start doing that, Paul, for everything money. That would really get
I
a
pretty much
value.
do it on the videos.
Okay, keep going.
Yeah.
Anyway, I just spit venom.
People have been talking about this one in the Bid and Ask Nation. It's because it's just on the bottom here going sideways. So this is a perfect one. This is technically a dog stock, and a dog stock is a stock that gets below into this oversold area, and it just goes sideways for a very long time, while the stock price typically declines slowly. Now, what I'm waiting for is this red line to just break up here into the sweet spot. You'll start getting green engulfing candlesticks. I think you'll start getting them around, 57.50 a share. And then you're going to make a run to $60 to $62. That's kind of where I see this thing going. More likely, you're going to stop around 60, just because 62 is getting back to the previous highs that it was making earlier this year or last year. But
if you don't have time to monitor when this stock starts swinging back up into the positive direction, you can join the Bid and Ask, and Mo will alert you the very day that he's buying and alert you when to take profits. There's an incredible group of traders, and if you're drawn to this, you'll certainly have a blast in the Bid and Ask.
Yeah, I think we have this in the dog stock channel, and if not, I'm going to put it in there right now.
Please do. Paul, if that's your real name, what are you doing over there? What are you doing?
I'm using our stock analyzer tool to sit here and give me a value for the stock based on certain assumptions I may make. Now, what this does is it gives my 1, 5-year, and 10-year averages, annualized returns on certain attributes like revenue growth, share change, profit margin, free cash flow. This is all included in the software. So what I'm doing is I'm doing low, middle, and high assumptions. That way it can tell me, should I buy the stock and at what price I should buy it for. So let's see here, 5, 6, 7, PE of 12, 15, 18. It's a big company, so I want a low PE and a low price of free cash flow. I guarantee this company is probably not going to hit my numbers. $55 stock, look at that. Based on these assumptions, which I will agree are conservative, the stock is worth between 13 and 71. Now you sit there and say, Paul, how is it possible in such a wide range? That's the point of a stock analyzer tool. It's only as good as your inputs. If you change your inputs to be very aggressive, I can change revenue to be revenue growth of 3, 5, and 7%. I can change profit margin to be 13, 15, and 17. And I can change PE to be 15, 18, and 21. And I can assume my returns to be 10% all around. And guess what? Oh, look, things are screaming buy. Mm-hmm. So it all depends on what your assumptions are. The question is, are your assumptions reasonable? And I don't think these assumptions that I put in here to get these numbers are reasonable assumptions. Your job as a value investor, for those of you who listen to our show, and it speaks to you, is to sit there and say, how can I buy a company where on very conservative assumptions, it's still selling for less than my conservative assumptions? That's the goal of value investing.
If you aren't very clear on what assumptions you should have, you just need to watch our show over and over and over. I've been sitting here for 3 years getting this lesson from Paul, and I'm still learning. So if this is foggy now, just stay with us, and Paul will help you with the assumptions you need to make. Go ahead,
Can I
Paul.
interrupt?
Please do.
I'm very jealous.
Go ahead.
What happened to Mo last night?
Oh, my goodness.
The first one of us to get recognized in public, technically from an unknown. I was recognized a while back, but the kid already knew me. He's like, wait, I know that guy. Mo was in the Giant Eagle grocery store, and some kid came up to him and said, aren't you Mo from, he's like, wait, you're Mo from Everything Money. Yeah, look at great. John over here. This happened last night. So Mo FaceTimes me. I answer. I start going into some gibberish about something. He goes, hang on a second, Paul. He puts this kid on. He's like, this kid just recognized me. I was beyond jealous.
The kid was like, oh my God, Mo. And he's like this. And then I put Paul on. He's like, oh my God, it's Paul.
Wow, you are famous, bro.
It was funny.
I can't believe Seth hasn't been recognized.
Well, I was going to say, I look like Sasquatch to begin with. I mean, I would imagine someone's going to hone me out. But, wow, interesting. This is our take on Verizon. No. If you want to recognize us in a local Akron Giant Eagle, join the Patreon and you'll fall in love with us. We'll fall in love with you.
And anybody who recognizes Seth, if you go up to him, Seth will give you $1,000 out of his wallet right then and there.
After I borrow it from Paul. That's great. Perfect. That's our take. Fondle the thumbs up. We'll see you guys on the Discord and those private, exclusive Patreon chats that we do every single week, Paul. See you on the live stream, guys. We love you, and we'll see you next video. Thanks so much.